Hello everyone, this is Akshay here from Emagia Corporation. Good morning and good afternoon to all of you. I know we have many people joining in from multiple locations, and thank you again for joining us today. Before we begin, let's go over a few housekeeping items. I would like to request you all to mute your audio during the presentation, and if you have any questions, please post your questions in the chat option provided by the WebEx chat over here, and we will be responding to these questions at the end of the presentation. Your questions will be taken up in a sequential order, and if you are unable to get to any of your questions, we will send a response to them separately over an email. We will also be recording this session and sharing it with all the attendees. For today's webinar, which is about digital credit, onboarding the customer, we have with us our speakers, 𝗔𝗂𝘀𝘀𝗀𝗏. He is the Director Credit at Walters Wholesale Electric. And TJ is a very experienced business professional with over 40 years of experience. He has held several roles in terms of sales management, and branch management, as well as most recently as part of the credit management role as well. His diverse background and experience provides him with a unique ability to see and understand situations from various vantage points. And having served on the industry boards, TJ is a very active participant in both the sales and credit industry groups. Our second speaker today is 𝗤𝗏𝗏 Saavedra, and Phyllis has over 20 years of experience. She's currently working as Director Order to Cash Solutions at Emagia Corporation. And she has been a veteran in the field of finance, specifically from order to cash point of view, and has been basically taking the functional as well as consultative roles over the years that she has been working in this field. She has held several senior management positions in companies such as SanDisk, Novellus, and Saba Software. And additionally, she has also extensive experience as a consultant and implementer of software in all areas of order to cash cycles. Before taking much of your time, I would like to move it over to Phyllis. Phyllis, can you please begin the presentation?
Thank you, Akshay. Welcome, everyone, and thanks for joining us. Hopefully, you will enjoy this session and get a lot of knowledge from the webinar. So before I get started, very quickly, just to tell you a little bit about Emagia, who I work for and who is sponsoring this webinar. We are an order-to-cash solution provider. We are located in Northern California, pardon me, in the Silicon Valley. Our whole platform is based on really three principles of technology, those of automation, analytics, and artificial intelligence. And for our customers, which are a unique group of companies, we provide order-to-cash solutions, anything from credit, collections, accounts receivable, cash application, along with analytics and reporting. So if you just tell you a little bit about us, that'll help you know where we're coming from. Digital transformation is the next step in transformation. It provides innovation, scalability, and agility. And I think after today's webinar, I think you're going to learn a lot more about that. So today we're beginning what is the first in a series, a three-part series on digital order to cash. From our perspective, an efficient order to cash process requires an integrated approach and a focus on all components of the life cycle. We believe that technology needs to play a part in every aspect of this life cycle, very specifically digital automation, artificial intelligence, and analytics. So what are we going to be talking about today? I'm going to start out going over some things about the why and how of digital, give you a little more details about digital transformation if you don't have a whole lot of experience in that area. And then specifically, I'm going to start honing it in and talk about those front-end processes of order management and credit risk and the customer experience related to them. Then we'll talk about automating the credit process. And then finally, how do you get started on a project? Many of you, you'll get lots of ideas and lots of excitement from hearing the opportunities here on the webinar, and so I'll give you some real-life ways on how to get started. And then finally, as Akshay introduced 𝗔𝗂𝘀𝘀𝗀𝗄𝗧, we're very lucky to have him today. He's a very experienced credit professional. TJ is also an implementer of credit automation tools. So we're going to hear some of the pluses and minuses, some of the things that he had to go through in order to get implemented, and then some of the suggestions that he has for you if you're interested in getting started. So with that, let's get started. In a recent survey, Dell Technologies found what I think most of us have really suspected all along. We all know that we need and want digital transformation, but most of us have yet to adopt it. As you can see by the survey, most people believe that digital transformation should be a part of their organization, but a good 51% of them struggle with how to do it and how to do so by meeting their customers' needs at the same time. Today, we're going to discuss a lot of these different topics. It's important to recognize that digital businesses are different from traditional non-digital businesses. To truly transform and reap the benefits, you need to adopt a new mindset as well as a new approach. We recommend that you really consider certain rules when thinking about digital transformation. Number one, make the delivery easy, effective, and positive. In order to make it stick, if it's not easy, if it doesn't provide benefits to your company, and if your customers don't like it and find it easy to use, it's going to fail. Also, make sure that your technology aligns with your business strategy and your visionary leadership. Is your strategy to bring on more customers? Is your strategy to grow by merger or acquisition? What is the strategy? What is your leadership telling you? Consider digital technologies that align with this. Focus your operations, focus these transformations on things that your customers value. What is it your customers, are needing from you? Are they needing to get on board more quickly? Are they needing more credit? Are they needing their orders to come off hold more rapidly? These are the kind of things that you should be thinking about. Really think about what your problem statement as a business is before you start, this digital transformation journey. You want things that are going to accelerate your business and help you scale. Really, this is a simple concept if you think about it. You want it to be easy, you want it to be effective, right? You don't want anything that's going to impede the growth of your business. Align again with your business priorities, that's really crucial. And then tie your strategy to the business outcomes. So is the strategy, to bring on 100 new customers a year? Is your strategy to grow revenue by 25%? Is your strategy to shorten the order to cash life cycle? Know strategy and align the types of tools you're looking at with these various strategies. So what can you expect from a truly digital order to cash department? You want to be able to get something, right? You want something to, you want the outcome to be positive, right? So you want a positive customer experience. You want to be able to get this when you consider going digital. Digital is a new way of engaging your customers. It really speeds up interactions. It empowers you to serve your customers in a better way. It makes onboarding made much more easy. If you think about it, that's what we're talking about today. We're talking about the sales order process. We're talking about credit hold and release. We're talking about managing the financial risk of your customers. We want to make this, you need to get customers on board. You need to get the right customers on board. You want to make it easier. But very importantly, in order to make this a positive experience, you want to make it instant, you want to make it automated, and you want to give your customers the ability to do so remotely. You don't want everybody to have to fill in a credit application and drop it off at somebody's office. Those days are sort of hopefully gone, at least, from my perspective. You want the impact of business growth. So for some executives, they like to say it's about technology. For others, it's about a new way of doing business. The truth is, happier customers come back. I think this is a very simple concept, but if you really think about it, if you have two different businesses, you're both providing the same product or services, your prices are fairly comparative or comparable, the one that's going to be easier to do business with is going to get more customers. In order for your business to grow, of course, you need to minimize risk and bad debt. I'm going to assume that the vast majority of the people on this call are credit and collections or order-to-cash professionals or finance executives. You want to be able to minimize risk and you want to be able to minimize bad debt write-offs. Going digital allows you to do all of this. It allows you to standardize certain processes. It allows you to manage your high-risk customers, spend a little more time on the higher-risk customers. It allows you to analyze the customers that are coming on board, trying to increase the number of sales to those customers that are good customers. Customers also that have room on their credit limits, things like that. Digital also allows you to target new markets. You can be innovative. You can start going out and analyzing the markets that are out there and really being, help your business be strategic. One of the things that you're going to learn from this webinar today is that strategy becomes a big part of the credit and collections department. The days of yesterday where the credit department was just somebody approving, rubber stamping credit applications or reviewing credit applications are gone. You're going to see that there's going to be a dramatic shift in the department becoming thought leaders in the business. You can use a lot of these digital technologies to help your business drive which types of customers they should be going after. So, what is the end result? You get efficient operation. It frees up resources from the mundane, repetitive tasks, and it allows you to spend more time on meaningful interpretation of data. We like to say transform or fall behind. And finally, as I mentioned earlier, it will help you standardize processes. So now we know the hows and whys. So I want to talk to you about some specific technologies available to you in the world of credit today. Things that you can do, as I mentioned earlier, aligning business technology with priorities is imperative. It's imperative, and it's probably, I personally would think it's essential. So some of the technologies that are out there in the marketplace today, and certainly ones you can find in our solution, digital credit applications, online, easily available credit applications. And in a little while, I'll go into a little more detail on these various technologies. Digital reference checks. Shouldn't have to call a bank or trade reference anymore. All of this should happen automated and quickly. Interfacing to credit bureaus. The vast majority of credit bureaus out in the marketplace today, people like Dun & Bradstreet, Equifax, AnswersX, any number of the industry-specific bureaus. All of these typically have APIs that will attach to software solutions such as ours and allow you to perform credit scoring and various credit approvals throughout the tool. You should be able to, instead of having to manually review credit for a customer once a year or twice a year, whether you have audit compliance or Sarbanes-Oxley compliance or some sort of regulatory compliance, you want a system that's going to remind you and automatically renew credit for those customers that fall within those process requirements. Digital assistance. Digital assistant is another great technology out there. You've all probably used Siri and Alexa in your personal life. Utilizing a digital assistant such as the one Emagia has, 𝗔𝗂𝘀𝗀, will help minimize your manual work. These digital assistants can perform routine tasks. They can fetch data for you. They're all natural language and voice activated. And then finally, bots as a digital reference center. These kind of technologies allow you to utilize robotic process automation to go out and verify information. If you are, for example, in the building industry, you could utilize a bot to go out and verify contractor's license. How often do you have to go out and verify that somebody has a valid contractor's license? We actually had a customer who's a winery that has to verify alcoholic beverage council licenses. They're utilizing a bot to go out before every shipment. They have to verify that somebody has a valid ABC license. They can use this. So anybody that's doing these sort of repetitive, routine tasks, these kind of technologies are out there and they're really great to use. So what's tomorrow going to look like? You know, I like to say, don't worry about robots taking your job. Worry about not being prepared for the future. I hear a lot of people when, you know, I'm out there constantly doing webinars and education sessions for people like the NACM groups and things like that. And people, it never fails. Somebody comes up to me and says, I'm really worried that these robots are going to take my job. And the thing is, the bigger concern is not about a robot taking your job. It's more about you not being prepared for the future and shifting how you view your role in the organization. Where we are going to be in the future, number one, it's going to be a customer-first digital credit organization. Number one, you know, I can think back to the, let's call it the old days, the dinosaur days, when I first started in credit. I'll be honest, I don't know that we cared so much about our customers. We were more concerned about selling somebody, assigning a credit limit, and then making sure that we could collect that money. We never thought about the next sale and the next sale, and we never really conceptualized that process of a happy customer coming back. So digital organizations really help us get to that. We're also going to see that an integration of the credit department with technology, talent, change management, and leadership. Credit is going to become an integral part of all of these parts of the organization. Artificial intelligence is going to become pervasive. There's no stopping it. I mean, people, these repetitive tasks, sending out invoices, faxing a credit application to a customer, things like that, that's going to go away. It's all going to become automated. Many of your customers, you might have business where they're going to want and require mobile access. We see this again, we see this a lot in the building trades, where somebody wants to be able to access a credit application from their cell phone or from a tablet. Somebody sitting on a job site. Not everybody like me sits at a desk in front of a laptop all day and can type things in. Your customers are going to demand this from you, and you're going to need to comply with this. Same with real-time approvals. People don't want to wait anymore. There's no longer a week or a day or 2 days to approve a credit application. People are expecting real-time answers. Along with those real-time answers, they're also expecting 24/7 self-service. It's a different generation, right? You no longer do you have to wait until 10 a.m. tomorrow morning to go buy a pair of shoes. You can go on Amazon 24 hours a day and buy those shoes for you, and you can get them by tomorrow if you want. Customers feel the same way about applying for credit, about knowing their credit limits, about getting their orders released. It's a very, you know, all day long type of business. And we're going to see a hyper-connected credit supply chain between the enterprise systems, bureaus, and other participating systems. There's going to be APIs available. No longer should you expect your ERP system or your financial system of record to do everything for you. You're going to see these systems connecting a lot more with third-party solution providers, software providers, people such as ourselves, people like credit bureaus and banks that are going to give you a wholly integrated supply chain without requiring it from a single system or single solution. So anyone who's heard me talk will hear me say this, and I say this time and time again, and I truly believe this. I think that the order-to-cash department, or I know that the order-to-cash department is one of the few groups within the company that interacts with both internal and external customers. If you're a member of this organization, I'm going to bet that you probably know more about the business than any other function. And I think what we're going to see is utilizing this knowledge in the future to help improve your business. So let's talk about these crucial front-end processes and how they really impact the business. Digital technology is drastically altering the balance of power between customers and companies. While companies gain the power of information and choice, digital technology dramatically improves the economics of the business. These economics are the primary drivers of digital transformation, this being from Forrester. It all comes down to the customer. Bringing on new customers, managing risk, and maintaining relationships with those customers. So IDC shows us that there's a direct parallel between digital success and customer success. If you don't take anything away from today, that's probably one of the most important things I'm telling you. Digital should be viewed as a direct path towards your company's growth. So what are the front-end processes and how do they benefit from a digital credit experience? Cloud. Cloud has changed how we do business with our customers. The advent of cloud solutions helps us save costs. It more so than the traditional systems, the traditional on-premise systems. It helps us improve operations, and it actually helps us support our customers more easily. The credit application process, I want you to think about that. The credit application process, aside from probably meeting your salesperson, is one of the first introductions your customer has to doing business with you. So if it's an easy process, if it is quick and painless, and the customer gets what they want from it. What your customer wants, obviously, is credit. They want terms. They want to be able to, have 30 days to pay for their product. They want orders to be released timely. We want these orders released, and we want them with minimal risk. There are processes out there that will help you view your order, hold, and release, that will help you go and check your credit exposure, making sure that you're not selling to somebody over a credit limit, therefore, obviously jeopardizing your revenue recognition and not increasing your bad debt write-offs. So you want to look at the processes of releasing orders, and you want an automated system that will help you do so. You need a system that's going to help you perform due diligence on a customer. Of course, we want to sell to good customers, right? And we want to repeat with those good customers. We want to know the regions that are good, where there's financial stability and political stability. These are the kind of things an automated tool can provide you. You can access third-party systems with these types of data. You want to be able to see red flags and anomalies. You want to be able to spot those customers. You want a notification if somebody isn't paying, or if their credit is somehow deteriorated over the past year. Those are the kind of things. All of this automated. You shouldn't have to have a person who's sitting there and on a daily basis, Googling a customer or going to Yahoo and checking them out. Everything should be at your fingertips and become automated. I've probably repeated this any number of times throughout this, make it easy for customers to do business with you, and of course, protecting your revenue while growing the business. First approach is essential for company growth that we talked about, and a team that puts the customer first, customers' needs first, will likely be rewarded with loyal customers, credibility, and respect, and of course, getting that referral business that they're all looking for. So digital allows us to do better with less. It's no longer that old adage of doing more with less. We really, in the future, need to do more with less. How are we going to do more with less? Enhancing self-service capabilities. Again, that ease of access, that 24/7 access for your customer. Consider things like a CRM portal, something where your customers can go in and access it. Online credit applications, they can fill them in anytime they need to. They can save it, they can come back to it. They can do things, you know, at their convenience. And certainly we need to think about making our customers happy by shortening the sales cycle. Approving things faster, getting their orders out the door faster, getting their services provided more quickly. Those are the kind of things that really make a customer-first organization. So let's talk specifically about automating the credit process. So, you know, Horses for Sources is always a really, I think they provide great insight into things. And so they're saying, let's get to the point. Most of the past 5 years have borne witness to our industry postulate on the why and the what of digital, and many still do. It's time to focus on the how, right? Digital is no longer a new technology. It's important that we talk about very specific ways now to get to the how. Otherwise, we're just going to keep talking about it, and the next technology is going to pass us by. So it's time to reevaluate the cost and efficiency and sustainability of your risk management tools and processes. And as you reevaluate, I ask that you consider the following 10 essential tools that we believe are essential for digital credit automation. The first one being the online credit application. Any good online credit application will provide you with forms, it will provide you with templates, it will provide you with a link for your customers to apply for credit. It'll be self-service. It will help reduce the time to onboard. You want something that customizes with you, that it's your logo, it's your terms and conditions that are available. But most importantly, you want to be able to put it either on your website, you want your salesperson to be able to send it out, or potentially you want your credit department to send it out. But it should be easy access either via email or via URL and website. The second important feature would be digital signatures, right? You need your document to be legal. You need it to be signed by the appropriate people. So you want to make sure, if any of you are interested, I did a blog a couple years ago that's out on my LinkedIn site about the difference between digital and electronic signatures. Digital signatures being those where you use your mouse pad. There's also a CAPTCHA that makes sure you're, you know, where it says I'm not a robot kind of thing. Utilizing digital signatures have held up in just about every court in the Western world, making it a legal document. So if you're putting your terms and conditions on there that are driven by your legal department, you want to make this a legal document. We even go one step further, actually, at Emagia. We have a digital signature available in our credit feature for personal guarantees. Many of you may have your customers sign personal guarantees. As you're aware, in the United States, a signature on a personal guarantee needs to be separate from a credit application. So there are separate signatures. Regardless, make sure you're getting a tool that has a digital signature. Digital reference checks. I don't know how many times when I was working in a credit department, I would see the fax machine sort of overflowing with bank and trade references. And those were the lucky ones. Those are the ones that actually came back. A good credit application or credit management system is going to have references that go out and check automatically, both with bank and trade, certainly if those are the kind of things that you guys use in your business. You also want those references to come back, and you want them to store along with your application so that you have them. If you need to check them, maybe somebody's come in, you know, when I get to the automated scoring portion of this, when you think about scoring a customer, perhaps somebody scored a high risk. So you want to be able to go back and reference those references in the future because you might need those to be able to make a decision in the future. I mentioned earlier about integration with third-party agencies. It goes hand in hand with number 5. You want a system that provides automated scoring for you. What scoring does for you is it sets up a standardization of processes. So certain like customers are getting the same treatment on determining credit limits and credit evaluation. Not only that, are those like customers getting the same treatment, you're now scoring them. For example, if you give a customer a high, medium, or low risk, in the world of digital, where you should be automating at least a good 80% of your business, now you're leaving that 20% remaining that might be those medium and high-risk customers that require further evaluation, that might need some additional review. So utilizing these bureaus, bringing them in, using them to create specific scoring models. Rules-based credit limit granting, another very key essential in the automation process. Again, this helps with standardization. It helps you set up giving automated or automatic limits to certain customers. We deal with a lot of businesses. Sometimes they might have a lot of low-dollar sales. So they might want to grant everybody an instant $1,000 credit limit. That might be how their business works. And that might be 80% of their business. They only want to manage or manually work on those that require more than $1,000. So a system that would automatically grant those kind of credit limits, very important. Workflow approvals. You don't want to have to walk around credit applications. You don't want to have to email them around. Approvals should all happen through a standardized workflow. Earlier, we talked about reviews and periodic reviews. Like I said, if you fall under audit compliance or policy compliance or Sarbanes-Oxley compliance, and you have certain customers that need to be reviewed either on an annual basis or a semi-annual basis, it's very important that your system reminds you of those things so that you don't have to go back and remember yourselves, because that's how you end up with bad debt, and that's how you end up missing credit evaluations. The last two are kind of, I will say, are probably the most recent advents within the world of digital credit automation. We talked a little bit about them earlier. One of and probably two things that I find very important in an automation tool: productivity bots. Bots are really awesome for productivity. They automate tasks that you'd normally spend a lot of time doing. I talked to you earlier about things like verifying contractors' licenses, or I mentioned the winery and the ABC licenses. We recently had somebody come to us. It's an Australian business, and in Australia, they have to verify what's called an ABN number. It's basically the Australian version of a business license. They want a bot that will go out and do this for them. Think of them as your time-saving friends that go out and do these things for you so that you don't have to, or your credit analyst does not have to. I talked about digital assistants. I talked about our digital assistant, 𝗔𝗂𝘀𝘀cie. Natural language digital assistants are pervasive in our world today. I mentioned that we even have one here at Emagia. They can be used to assist your team with simple tasks and to enhance the performance of your team. So consider a tool that has a digital assistant. So the whole goal, what it really comes down to is working smarter, improving your customer experience, and freeing up your team to do more thought-provocative, higher value tasks. So a few ways to do that. Consider transitioning to an online, completely digital credit application. That's one. Leverage the digital technologies for digital signatures and bank and trade references. Integrate with third-party bureaus. This will help you really to standardize your scoring. It will help you have additional data in case you need to reevaluate a medium or high-risk customer. Automate your decision-making and set some rules. Automate those rules. probably all of you today may be working with a standard matrix or something for credit decisioning. If it's a customer from China and they've been in business X amount of years and they have this many employees and they have this many positive trade references and no bankruptcies and no write-offs, I'm going to give them this. Those are very simple rules. You can automate those. Automate this decisioning process. Automate the workflow, and certainly automate the renewals. Automate low and medium risks so that you can allocate your staff for higher risk, higher touch decisions. So now that I've got you interested in digital credit, I've talked to you about some of the technologies and the value that they bring, let's talk about how you get started. So I'm going to begin with another quote from my friends at Dell Technologies. Business leaders believe digital transformation would deliver these 5 game-changing game-changing benefits. And if you want to improve within the next 5 years, this is what it takes for, these are the 5 things it takes to have a successful digital strategy. So of course, after we finish today, you can't go running into your CFO's office and say, I want to start a digital transformation process. Your CFO or your CEO is probably going to laugh you out of their office. So here are some very specific things that I hope you'll consider. Assess your current state. As I mentioned at the outset, know what your pain points are, know what your business strategy is, know the data. How many credit applications are you processing today? How many get rejected? How long does it take to process them? Is it too long? Are your customers unhappy? Does your marketing department or your sales department provide, do customer satisfaction surveys? Those kind of things. Know the data, know your pain points. Build an ROI for your finance executive or your CEO. Know the costs. Know the risks involved if you don't put in a digital strategy. Find projects that are meaningful, right? Just automating credit applications to automate credit applications because you do one a month might not be the most valuable tool for your company. But if you do a whole bunch of them and somebody is sitting there having to look at those that would normally be rubber stamped, that are low risk, they're automatically going to get credit, you probably are not doing the most productive work. Get buy-in from everyone that's involved. Talk to your IT department. Know how much support is required from your vendor. Get this support early on. Get your finance team's support early on, sales and marketing. You want to build a holistic approach to these implementations and transformations. So now that I've talked about all this theoretical approach, let's get to what everybody's probably been waiting for. I want to switch gears and talk to somebody who works in the environment every day. So as we mentioned earlier, TJ Nance from Walters Wholesale Electric has been grateful enough to join us and deal with us as we had some of our technical issues. So TJ, I thought I would give you an opportunity maybe to give some opening comments before we start the Q&A.
Well, thank you very much. First off, very nice presentation. I, unlike, or maybe like many of you, were not originally a big proponent of anything that automated. I always felt like having my hands on it was better. But we took the plunge with Emagia probably 3 years ago, roughly, and developed an online credit app. We thought that would be one of the most effective ways for us to kind of launch ourselves into a form of automation. And we kind of had a selfish desire because I don't know how the credit apps that you guys all receive, the credit apps that we receive are lacking in real elementary data most of the time. They don't even bother to tell me what, I have multiple stores, so they don't even tell me what store they want to deal with. I mean, there's just always a tremendous amount of lacking detail. And we had hoped and thought that in integrating and starting an online application where we would make certain fields mandatory, would improve that process and would improve the integrity of the information that we got. Not so much the process of going out and doing all of the other accompanying things, but just the raw data. We would actually know who the owner is. We would actually get references and things like that. And through the process, we used it quite aggressively in the beginning, and determined that. And as we worked through it, we were figuring, we had failed to do one thing, and that was to look at who our customers were, what kind of business we were in, and how we were going to be successful. We deal with, am I going too far, Phyllis?
No, keep going. I think, I don't know, I'm interested in hearing what you've got to say. I don't even need to ask you questions. I think this is fabulous, and hopefully the others find it so.
Our desire was to go full-blown rushing in and do this, and integrate and have everything all haywire work together. Heck, less work for us to do, more time for coffee. And what we determined is that we were getting information, but we deal with a lot of sole proprietors, a lot of partnerships, a lot of small businessmen. And as we would look at those applications, they were being submitted by, secretaries and project managers and signed by the wrong people. And we were just running into all kinds of, or they would just fill in the blanks. And so we had to kind of take a step back. And the one thing I will tell you about Emagia that I really appreciate is that when you sit down with them and you start talking about either the roadblocks or the hazards that you're coming across, they're very, very adept at helping you to achieve or change your platform to what you need. So we're having some success with it, but it still hasn't eliminated our paper applications. And that's just one little step into automation.
Well, thanks, TJ. No, I think that's great, and I think it's very helpful for people to hear. You and I were talking earlier about some of the new trends in the business. So,
yes.
I know you sit on some panels and some boards. So, what kind of trends are you seeing, and what are your peers talking about in terms of digital credit and what's going on, and what kind of things are they looking for?
Well, most people are looking for things that will automate all the aspects of credit. I mean, whether it's through, the collection part, through the cash application, through, check automation, transfer funds. They're looking for automation in every aspect of what they're doing. And again, I have to always go back and remember what kind of business you're in. I mean, if you're dealing with, not sophisticated, but more mature, or you're dealing with Fortune 500 companies, you're dealing with, larger industrials or OEMs, MROs, you're going to have a different result than you are if you're dealing with electrical contractors, HVAC contractors, guys who drive around in their truck, and are trying to do all their business out of the front seat of their truck. You would think that those guys would migrate to automation or to the use of like an online credit app or a digital credit app through an app. You would think that. But as Phyllis and I were talking earlier, it's almost like we're at a point in our businesses where we have to have duality. We have to start bringing in the AI, but not throwing out what we've been doing, because you've got two generations of customers out there. You have the boomer generation who doesn't want to change anything, and then you have the X and the Gen and the Y and the millennials coming in, and they're much more, they're completely prone to change and to adaptation. And as they become business owners, they're looking for those things. Whereas the guy that's sitting in his truck, and him and his brother and four guys they still want to do it the way they want to do it. They're not interested in changing. But you have all these new customers. It's really funny sitting here talking to myself. It's funny. You have all these new customers.
You're talking to me and lots of people out there
are coming in, and they expect that. And what I see is we do have we have online tools. We have an online presence where, you know, the order entry. We're going to be adding the online the application and the mobile application onto that. And you see that starting to be used broader and wider. But when you look at who those customers are that we have that are using them, they are generally your younger customers that don't have a problem with it. I mean, Phyllis and I were talking earlier. If you think about it, 10 years ago, I never would order off of Amazon. It was like, no, you know, time is changing everything. We're moving forward. It's like you're either going to get on the automation bus or get ran over by it. So it's a challenge trying to bring new technology in at the same time keep your legacy stuff in play and offered to an entire customer base. It is a challenge.
I think that's a really important point that you brought up. You know, TJ, I was at I was conducting an education session for NACM Connect in Ohio a few weeks ago, and I happened to be talking to two guys. I hope they don't mind I say this. Two guys from Sherwin-Williams Paint. One guy was a guy in his early 30s, and one guy was a guy, let's just say, north of 50. And so we were talking, and they were saying how they're both really interested, and this was on general automation and order to cash, but that Sherwin-Williams really wants to adopt this, and that they've had to take two different approaches. Because we'll call it the old school, more traditional business practitioners were looking at these things, and you had to slowly bring it on, and you would have to your point, still keep some of the old, bring in some of the new, kind of transition to it, and probably more delicately show them how it worked. Whereas this guy in his 30s is like, yep, we're ready for automation. We don't want to talk to anybody. We want to do everything over our phone and over our tablet, and it's 24/7, and we don't even have I don't even have my collectors make calls, things like that. So that kind of brings me to, you mentioned some of your peers out there. Do you think that there's difficulty getting these projects approved within the business? And what advice would you give to somebody that is trying to get their management to approve a digital transformation or a digital credit project?
Know what your return on investment is. Understand that. Be able to articulate it. I mean, generally, people that are the leadership of your companies want to know what the net financial impact is. Have kind of a real basic understanding of how it's going to impact not just credit, but how it's going to impact sales. Kind of maybe even do a few surveys with some of your across a little broad selection of your people, and know what the general consensus is with people there, and then engage your customers. I mean, and it's one thing when you just go in and say, hey, I saw this really neat thing, and we could do this, and da-da-da-da-da. But when you start talking about, I've talked to customers, here's the input I got from them. I've talked to our sales staff, here's the input from them, and here's our return on investment. And when you paint the picture in that manner, it's really hard for anyone to say no.
Excellent. So you recently came to us, you talked to us, I know you were at Credit Congress, and you'd seen our CEO and talked to her about mobile credit applications, and we showed you our tool. So tell me, what do you see as the benefit of mobile applications, and do you think they're going to be adopted out there, in the general, for general usage?
I think it's going to be a slow adaptation. It's generational. It's going to take some time. We still get a tremendous amount of guys who want you to fax them a credit app, and they walk it in and drop it off at the branch. That still is, for us, is the majority. It is going to change over the next 5 years. You're going to see the needle turn and move. So even within our own organization, when I'm out, I have our app on my phone, and when I'm making a call on a customer about money, I always try to bring up, why are you using our online application? And it's funny because, as Phyllis just said, the older salespeople are like, no, I want them to call me, because they want to be, you call me. The younger salespeople are like, they're much more engaged in helping our customers use that, and it's I've kind of rambling a little bit, but yeah, you just have to constantly, you have to be mobile, you have to be nimble when you're doing this.
So it sounds like it's a good thing to have out there as an offering, but
yes,
it's going to take a little time to adopt.
You have to have the offer. It's just going to take a while for before it becomes not the exception but the norm. I mean, as devices get smaller and smaller and more powerful, more and more people are running their businesses off of their phone. Whether they're, I mean, QuickBooks now has all mobile apps, so a guy can scan an invoice. I mean, it's just going to get much more. It's going to get much more mobile. We want to call it AI, but it's going to get much more mobile, much more portable for them. They're going to have their businesses. They're going to carry it around in their back pocket. I mean, we're looking at how to integrate with all of the different platforms that exist for small businesses, so that we don't even have to mail an invoice. It's just all digital. I mean, the concept on order to cash, it's like just taking their payments. We started using UTA and their ACH portal and remote deposit capture, I don't know, 3-4 years ago. It's amazing how that is progressing, and the adaptation is just steamrolling. And as people find out, oh, you mean I don't have to drive to Pasadena and drop a check off? I can just go click in here and throw it away. It just takes time.
Yeah, there's a lot of great automation technology out there.
Yeah.
So, TJ, thank you. I think we're approaching the top of the hour. Anything else you want to share with the folks that are listening?
No, just don't be afraid. That's what
Excellent. I think
don't be
I think we're going to change that to our mission statement for our company. Don't be afraid.
I mean, no. Phyllis, you can tell them I was not like ooh, let's do this. It was,
Yeah, it did take some arm twisting.
and it's been, we are talking quite a bit about how to improve the process. So just don't be afraid.
And that's a good point. I think it's an evolution. TJ regularly will come to us, or periodically, I should say, come to us and say, I want to be able to do this now, and can you do this? And so I think as I wrap it up, I think the whole point of digital credit automation and order to cash automation in general is it's a process. And you should think about, again, what it is your company needs, what your pain points are, and you don't have to eat the whole elephant at once. Maybe think of it as a step-by-step process. Get the more seasoned folks on board a little more slowly, while the others, the younger generation of employees are pretty happy and just more used to it. So, think of it as a phased approach, and I think that will be a great way to get started. So with that, I know we were hit the top of the hour. I know because we had some technical difficulties. I do want to give, if anybody has any questions, give you a couple minutes to ask some questions. You can ask them to either TJ or I. Ask through the chat button on your WebEx. I'll give it a second. So TJ, I have a question that came in for you.
Yes.
Did your automation of your credit application process require a lot of IT support?
No, it did not.
Okay. that was simple and to the point.
It was real simple because it's outside of our, it's outside of, it sits outside of our system.
Right. Yeah. So one of tools typically, I mean, that was, if you recall earlier in the discussion, I talked about the cloud and the benefits.
Right.
Really, cloud implementations require very little IT support.
Right.
This next question I'm going to take, what does it cost to implement a credit automation tool? Well, that's a good question, but it really, each vendor is different. If you think about how Emagia works, it's really application usage, you know, how many apps you run a month, is there any customization to it, do you have more than one application template? I don't want to call out the person that's asking the question, so my contact information is on the screen. Certainly, if you want some more information, please email me and we'll have a private discussion on what it costs. The only thing I will say is if you're looking at, right, thank you. And if you're looking at beginning the order-to-cash automation journey, credit is the cheapest, easiest, and one of the most valuable ways to do so because you are managing business risk and you're managing your bad debt write-off and your AR is healthier, so your working capital metrics are healthier. One more question I see here. We already score our customers using a spreadsheet. How would that work in a tool like yours? We basically replicate scoring. We can do it one of two ways. So if you decide to do credit scoring, we can either replicate what you're doing manually, hopefully, or as close to simulating that as possible, or we can work with you to help you develop a scoring methodology that works, that is best practices for your industry. So with that, again, I want to apologize for our earlier technical difficulties. The webinar will be available. I think our marketing team will send it out to each of you. It will also, if you go to the Emagia website that's listed on the page, /resources, you can get a copy of this webinar. Should be available in a couple days, along with a bunch of other webinars and white pages if you're interested. And of course, my contact information is here. I'll leave it up on the screen for a couple seconds in case you're interested. I want to thank TJ. I want to thank you very much. I think it was really helpful. And I want to thank everyone for joining. So have a great day.
Thank you, guys.
And look for our next webinar on collections. That will be, I believe it's a month from today. Thank you, everyone, and have a great day.
All right, thank you. Bye.
Bye.